a sense of capital. Aloha, lads and gents. Welcome back to a new episode of A Sense of Capital Live Earnings. Your host of today, as always, is Julian, and I'm very glad to have all of you in, whoever it is. I'm not sure who. I know that certain members of the community have already announced that they will join, but we will see. Guys, this time I did it a bit different because I didn't start my stream already in advance of the earnings results, but I've decided to first screen the results, enter them into my Excel sheet, so the boring part getting removed for you guys, and we can create a little bit more compact, sense of the results. Let's say it like this. Lone mover man, a man of loyalty and reliability. He is in. Thank you so much, man. I was very happy and kind and pleased to hear from you yesterday while I was creating my monthly update and preparing the sheet for today's episode. So thank you very much for joining. However, guys, I will go on and not waste any time. Honestly, I didn't check the earnings, the price development so far after market closing of HIMS and HERS, the company you all waited for, the earnings results, the Q1 earnings results for weeks, and today they have been announced roughly 20 minutes ago. Yes, so before we jump in, a quick disclaimer is always addressed to you that in the upcoming minutes that will not be financial advice, consultation whatsoever, and there's no guarantee for correctness of the provided data. Yeah, so no, I know my text already. My brain is working on my memory. However, that's not what it is today about. Today it's about this earnings results. So the HIMS and HERS earnings results, you know who's HIMS and HERS. Digital doctor shop, digital pharmacy, provider of medical solutions, and of course personalized solutions, and yes, weight loss as well. So guys, and the earnings are already live, and I already entered them into the sheet. Yeah, so that's the new part of the game, again, to not waste too much time of you. So I mean, the downside is you now need to trust that I copied the data out of it one-to-one and didn't changed it somehow, manipulated it. If that happened, it was not on purpose, but actually I don't think that's the case. So guys, let's jump in. I already tell you right now on the first glance, and I just really copied and pasted the information and eat some lasagna next to it. Brushed my teeth and now ready for you guys. It's like a date. I can tell you already now that on the first glance I'm quite happy with the results, even though I think not everything is positive, but we will check this out together in the details in a moment, and the moment starts right now. You can see here the classic earnings sheet, what I'm always sharing with you, and you can see here earnings per share, bottom line growth, revenue, top line growth, the different quarters of this year, different quarters of past year to compare it to them. So focus on this, and first of all we will prioritize the earnings per share, and for this I basically use the hijack BDR. Why is it going down? I have no clue if it's going down or not. Actually, I didn't check the price yet, but I have a clue why this might be the case, because again, based on my first screening, not everything is in perfect shape, but we will check this in a moment. Yeah, so this might be the answer to your question, Jack. However, guys, so for EPS, I calculated basically or deducted net income by the number of weighted average shares outstanding on a diluted base, and that is $0.2 per share, as you can see here. So basically forecast was $0.14, and I honestly, what I've stated here, for me, the barrier they need to jump above was or climb above was $0.15 per share. That is what I want to see to have some kind of satisfaction on a neutral level, and everything above would be positive for me. And so in terms of earnings per share of this quarter, of the past quarter, Q1 2025, I'm quite happy. So therefore, it's basically a no-brainer to grant a positive rating for on the profit side. But now let's check together the revenue side, and actually here it looks great as well. Yeah, so the forecast, I'm not sure if you can see it. I try to give my best. Here you can see the 534.96 million US dollars revenue was basically which the analysts have been calculated with, and the actual result is 586. So really strong beat by roughly 51 million US dollars in revenue. You can see here green colored. That was my satisfaction target, let's say it like this. So small beat of roughly 8 million US dollars, but they did definitely raise this bar way stronger. So very strong. And forecast, and there Jack might be already the first. I'm not sure how you say this in English, but in German you say das erste Haar in der Suppe. So the first hair in the soup. Yeah. So it's kind of annoying and somehow puts in some negative elements and affects the results. And yes, I mean, you can see the forecast of the Q2 revenue, and I mean, sometimes there might be some seasonality or whatsoever. You should not forget, I mean, it's not like regular seasonality in this case. It's more like most of the GLP-1 business, compounding GLP-1 business, will run out of the end of the second quarter. It will, or even right now already. So it's driving down, and I assume this will have as well a negative impact on the revenue target for the full quarter. And so you can see the jump from Q1 to Q2 is just roughly 5 million US dollars. Yeah, and I assume that market is definitely assuming or expecting more performance in terms of revenue. Yeah, it's just kind of a bumper. But again, guys, don't forget we had strong drivers with this GLP-1, and HIMS and HERS is not just GLP-1, for sure not just GLP-1, even if they will keep making money and achieving revenue with their weight loss products. However, I think that is definitely something which kind of hit it negative, even though it's not that surprising. However, sometimes market is expecting just simply more. So in terms of the actual received revenue, I would definitely grant, because of this 586 and 51 million US dollar beat, I would definitely grant a positive rating in terms of top line growth. But considering the forecast for Q2 2025, which is as well for me, I understand it. I'm quite sure they will add some color in the earnings call later on and explain what stands behind this. And I'm quite sure when you check the shareholder letter and details, I didn't have enough time for this, there will be as well some reasons why it is not that high. But again, very likely it will be the weight loss impact. Yeah. However, it is simply negative when you compare it to growth rates in the past. I mean, you can see Q4 2024 to Q1 2025 was roughly 150 million US dollars positive development. Yeah, and now only 5 million. Yeah, so we do a blend, we mix together the revenue, the actual revenue of Q1 and the forecast of Q2. If we balance it out 50-50, it would be a neutral rating. Yeah. So I would color it yellow. And I think this is what I'm doing. That's what I will do, but it has for sure a more negative touch, because for me the future is always more important than the presence. And yeah, it's great that they achieved great results, and even though there are reasons or whatsoever, you would always like to see a higher year-on-year growth, and that is not the case. Yeah, so it's a bit tricky decision for me. However, as I mentioned, I rated neutral, but again, with a negative touch. That's for sure, because of the forecast, because of the outlook. Yeah. Hi, Mustafa. Okay, now let's dig a little bit more deeper into the details, and for this I prepared Further KPIs and basically numbers I've already copied from the press release. Revenues already covered. Marketing I've entered. You can see just a slight increase compared to the past quarter, which is amazing, and but something what we don't focus too much because we will focus those KPIs. But the first KPI we will rate, in which is fat marked, are subscribers, and you can see definitely a higher number to compared to the past quarter. And you know, as a loyal viewer of the stream, you always know that I will compare past quarter year-on-year growth rates to this quarter year-on-year growth rates. So Q4 2024 year-on-year means Q4 2024 results compared to Q4 2023 results. And Q1 2025 year-on-year means Q1 2025 results compared to Q1 2024 results. Yeah? And I want to see that these kind of growth rates are in best case improving, of course. But if they are already high, they somehow keep the momentum or just a slightly decrease. And what you can see here, I mean, past quarter year-on-year growth was 45% in terms of subscribers. Now we're talking about roughly 83%, 38%, not 83, 38%, 38. And from my point of view, that's definitely not that bad. We need to stay realistic. I mean, again, big growth driver was and is here as well. I mean, it was a very strong quarter. You need to consider that, for instance, all the Super Bowl hype stuff which was going on, promoting weight loss, and you know, this big focus, big scope set on HIMS and HERS took place all in Q1, but already in advance a lot of customers very likely or new subscribers joined to HIMS and HERS because of weight loss. So 45% was already very, very, very strong, and 38% I think is still solid. But again, keep in mind that maybe investors expected higher growth rates because of this, let's say, hype quarter, first quarter this year. Yeah, of the Super Bowl and all of this kind of stuff, yeah. So actually, for me, it's not negative, but it's a tricky call for me in terms of subscribers, and I will rate it as well neutral, but again with a more negative touch, yeah, with a more red touch. Wait, here. So I will do it. Someone. Suleiman Ahmed is writing in the chat. I love you guys that you are utilizing the chat. That's great, and I try to interact. So I'm quickly reading. So Suleiman Ahmed is writing, yes, but still not moving past email, VWeb. They got a huge deal with Novo Nordisk, a Danish company with Wegovy medicine. It's potentially a huge deal for HIMS. Yeah, might be the case. Maybe we talk later about this. I have as well some kind of opinion about it. But we will see what will be the outcome. But I can tell you already, very compromised right now, Suleiman, that from my perspective, that was the first positive overreaction of the market when it was announced, I think last week, since I'm an investor, and that is more than 2 years. So for me, the reaction of the market was a bit too strong, too positively strong, and of course I appreciate it. But yes, maybe it was kind of a kickoff for the undervaluation from the perspective from many investors. Yeah. So, however, let's go on and check out what is going on with the revenue per subscriber. So really see, is there some upselling or cross-selling going on? So do they buy more? A higher volume, a higher amount of whatever pills of the same type, which is upselling, or cross-selling? Do they sell to the same subscriber further articles, further products, other medical solutions, for instance? Yeah, and we can see here this as well is decreasing. Yeah, it's decreasing. So you can see it on the first glance. I mean, yes, compared to the third quarter of 2024, it's still the second highest result, but it's lower than Q4. So that as well is kind of a bumper, yeah. Yes, you can see here Past quarter year-on-year development 64%, this quarter 52%, so again decreasing a bit. Yeah, but here really you want to see higher results somehow, because I mean in general GLP-1 weight loss products, or even in general their weight loss products, I mean they're not only selling GLP-1 weight loss products, they making sure to achieve higher revenue per subscriber because the prices are just simply higher than whatever some hair products where you spend maybe, I don't know, I don't use them, maybe even if I would need them, but whatever, $80 per month, you know, so weight loss is way more expensive. And so you can see here it's getting decreased, and I think that's as well something what the market is definitely not appreciating, yeah? And they are wondering, okay, what is the reason for it? And I assume actually this will get way lower next quarter, at least I expect it, because they will more and more stop selling their compounded GLP-1. Yes, they might sell the Novo Nordisk semaglutide GLP-1 weight loss products, yeah, so Wegovy or something like this, but we will see how it develops. However, that is definitely something not that positive. Yeah, we definitely want to see some constant base or increase, and that's a decrease. So honestly, guys, I was at the subscriber base a little bit more fair or a little bit more polite and put a neutral one, even though I had a more negative tendency. In this case, I will grant a negative rating, yeah, for revenue per subscriber. Yeah, Law Mover, ma'am, you're totally right. I mean, you're writing subscriber number, kind of meh, Super Bowl ad and all, yeah, and awkward face, smiley emoji you stated here in the chat. And yeah, Law Mover, ma'am, I'm sharing this opinion, yeah. So, I mean, however you want to shift it and from which perspective you want to screen it, both of them are not very positive. Not very positive. Again, first quarter was this big focus HIMS and HERS quarter, at least what how investors recognized it, how they took their view on it. And I mean, now the results are not a banger. So far, actually a more negative touch. Let's see what is going on with marketing of revenue. So really how much percentage of the revenue result was spent into marketing. So basically there was always this rumor in the past, or this doubt on HIMS and HERS, they are only a marketing company and they buy their revenue. So spending basically more marketing US dollars per, let's say on $1 revenue they spend more than $1 in marketing and just bought their revenue. And I think they proved in the past that's not the case. And let's see how it is developed, because you can see past quarter year-on-year minus 13%, now minus roughly 8%. So great that it's minus, because it should be negative. The marketing spend should get lower. However, here as well it's decreasing. And again, not something amazingly strong. I mean, it's increasing compared to past quarter. Yes, I mean, we have this Super Bowl stuff, for instance, which happened, yeah, and they really accelerated, and you might see this as a kind of investment, yeah, and staying very competitive and ahead of other vendors of this kind of solutions and services. But however, we would love to see it's getting decreased and it actually getting increased, yeah. And I need to stay harsh here, even though it's an investment into the future, and it might be the right strategical lever to decide to increase marketing spend for the management or by the management. From my perspective, just to focus this KPI, it's negative that it's getting higher, the marketing spend of revenue. So I rate it as well negative, yeah. And it's very surprising that I rate that much HIMS and HERS negative, those KPIs, because I'm really not used to it. And a lot of other companies I'm invested in, like for instance Alphen, which I will cover as well, I think in the upcoming week, but I need to check it out later on with you guys. However, I'm used to grant a lot of negative ratings. But HIMS and HERS, it's quite new to me. And yeah, let's see if we have as well some positive KPIs here. So now we check out the share of personalized solutions, yeah, of revenue. Again, a lot of weight loss stuff is basically tracked as personalized. So a big reason for increasing personalized solutions is their weight loss products, but as well a lot of other solutions are existing, and they really want to set more higher focus into the future. And I have really high hopes they do this. They're rolling out their business way more focused on individualized diagnoses, and then resulting or based on those diagnoses, individualized treatments. I would love that they have that, because it's basically, you can argue a lot about what is a mode for HIMS and HERS, what is defending their business and what makes them different to other players in the market. And for instance as well the big ones like Amazon, how they can protect their cake, their income source. And personalization might be really one key driver. If it's really personalized, and if you can only find the treatment you like and you appreciate the most for the pricing you can afford at HIMS and HERS, even though if there's you need to pay a special bonus price, a bit higher price, a premium price at HIMS and HERS, but the service and the products are that great that you are very sticky and you are stay loyal to the business. So, and that's great that it's increasing, yeah. So you can see already past quarter, year on year, it developed by 25%, and now it developed again by 25%. So even though it's not getting stronger, the incline, it is existing and it's still increasing. Yeah, you see, I mean 55% and now 6% is already high. So that's for me honestly positive. Yeah, even though it's not a game changer, it's not the core KPI whatsoever. I explained it perspectively in terms of achieving a strong mode. Very good KPI. And now we check out the gross margins. So basically really the product specific costs, yeah. So really just a small amount of expenditure or cost which is getting considered in this KPI, but it's a very relevant one on which you can compare to a lot of other players in this industry or to other industries. And I mean, without a doubt, everything above 60% or whatsoever is very strong. I mean, of course, it depends always what other costs are existing. Like you can see here, general administration, research development, operations, marketing, sales, whatsoever. But it's strong. And let's see how this gross margin is developing. And you can see, I mean, it decreased already, which is negative, but it decreased already by 6% year on year past quarter, and now by another 9%. Yeah, so a bit more than past quarter actually. You can see, yes, 4% lower than past quarter. Basically, it decreased from solid 80 plus range. Yeah, check this out from the past quarters, beginning by second quarter of 2023, lower to 73%. Why? Yeah, again, the answer is weight loss. The answer is GLP-1, because it's a very competitive business. I assume it's quite costly to manufacture those products. Not that simple like whatever, again, hair solutions. And so that's the reason why the gross margins getting impacted negatively. It's just a reasonable development, yeah. But of course, you don't want to see this kind of development, yeah. And I assume that next quarter, latest the third quarter results of this year, they will increase, because again, less weight loss sold, yeah, and then the gross margin will hopefully participate positively by this. But now, again, I need to rate it negative, because it's simply not that great, yeah, even though there are reasonable effects behind it, yeah. However, Okay guys, and now we check another glance on, or check a little bit more, the cost structure. I already mentioned some of those costs a moment ago, but we start with general and administrative. Is administration expensive share on a GAAP base of revenue. Yeah, very complicated. And let's see what is going on. So past quarter, we want to see it's getting reduced. Past quarter, it reduced already by 3%. Now it reduced by 4% year on year. So it's getting accelerated somehow. Yeah, and you can see it here in the numbers as well. I mean, here it's really a bit the opposite way, like in the gross margins. Here we come from a level from above 10% for sure. You can see 16% in the peak in the past 2 years, and now 50% lower. Yeah, so just 8%, and that's positive. That's straight positive. Yeah, I like that they're setting a focus on it. They're setting a higher focus on profitability, even though that's not the reason why I'm invested in HIMS and HERS. I'm definitely invested because of the sales growth focus. However, always nice to see they're getting more efficient, yeah, not throwing the money out of the window. Yeah. Let's see what is going on with T&D. It's basically research and development. I think it's technology and development, or how they call it. However, let's see what's going on. So past quarter, year-on-year development minus, yeah, more or less same level, and now minus 1%. Yeah, so that's again very strong, or very strong is too much. It's too much, but again, it's heading to the right direction, and we want to see some kind of level of investment in terms of research and development for the AI solutions and what kind of stuff, new products and manufacturer lines and platform developments of what kind of stuff, how they work with algorithms. Yeah, so all of this is okay, and I like to see still that it's going down, and that is what I appreciate. I don't think I can't get that low, honestly. I think 5% is already very solid, yeah, but it's still getting down by 1%. It's a difficult one. I'm somehow deciding between positive and neutral, and I think in this case I granted a neutral rating actually. Yeah, I mean, it's very solid. It's very solid. We can't expect it's getting down to 2% or something like this. I think that's not healthy for the business and for the future, for the sustainability of this company. But yeah, it's again not crazy surprising. Yeah? You can see it's already on the level of the fourth quarter, but definitely not negative as well. Let's check out what is going on with ONS, and just give me a moment. So with basically, I need to check it actually, with operations and support. Yeah, it's as well a cost category of HIMS and HERS. And let's see what is going on here. So past quarter minus 1.3%, or let's say minus 1%. This quarter year-on-year growth or reduction minus 3%. So which is great. So again, it's accelerating. It's slower than the past quarter. That is really nice to see. And here again, I keep it short as well, a positive rating. Yeah? So far so good when we take a look on the expenditure side of HIMS and HERS. And now we check out the elephant in the room, marketing expenses. Again, as I mentioned, they had this reputation of just buying the revenue, and let's see what is going on here. And it's a strong lever they can work very heavily with, and you can see here minus 5% past quarter already, and that's great year on year, and now minus 8% this quarter year on year. So very strong, definitely an all-time low. You can see past quarters, it was not one time below 40%, a lot of times even above 50%. Yeah, so that is very, very strong. That is very, very strong. And the reason why I think they have very good outlook for adjusted EBITDA, which we will take focus on in a moment. So overall operating expenses share, I think, heading into the right direction. There is no doubt about it after screening all the details of it. I mean, you can see past quarter year-on-year development was minus 10%, yes. And this quarter year-on-year minus 16%. So it's even accelerating and heading into the right direction. Momentum is increasing, great to see. I mean, big part of it was the reduction in terms of marketing. But yes, again as well, general administration was good development, organization support, good development. So it's a blend out of everything. They're working on all of this. Still making sure research development is not falling behind, which is great. And I completely like this category basically, and straight voted positively. And now, guys, I can see you using a lot the chat, and I love this very much. I will later on screen it and give feedback for sure here during the stream. Yeah, just give me a moment, please. I mean, go on with chatting with each other. That's amazing. But I will react to it in a moment when I finalize the sheet here. So now we focus and heading to the free cash flow. And I mean, just in the first glance, compare it to the past quarter results, you can see it's roughly 10 million lower than Q4 2024. And that again might be a bumper. Yeah, a reason why, as you mentioned, price might drop. Yeah. So there are reasons behind it, which I can relate to for sure. And again, I think free cash flow might be another reason. Yeah. You can see past quarter year-on-year development was roughly 450%, and now it's just 320%. I mean, yes, we need to consider that the tree is not growing into the sky, or how you call this saying, you know. But you can see, I mean, we started the fundament of the comparison to the past is getting higher and higher. And we start with 10 million, 19 million, 11 million, 12 million, and then boom, 48 million, and developing like crazy basically. Yeah. But again, I mean, the quarters we compare right now, the results of this quarter and the past quarter, so 1 year ago, are not that excellent. Yeah. They are already on a quite low level, so getting lower here is not that nice, and having a lower free cash flow than the past 2 quarters, again not nice. And so therefore, sorry guys, again a negative rating. Yeah, free cash flow is a measurement, it's a KPI which you can impact just on a limited base. It's quite, I think, at least from my perspective, a quite transparent information and detail, a parameter. And I mean, you can use it to buy back shares, to grant dividends, all this kind of stuff. Whatever you do, it's the free cash flow, how it's already worded. And so we would like to see it's higher, and it's getting decreased. And I don't see any alarm lights, let's say like this, you know, everything is good so far. But just focus this KPI right now and compare it to past quarters. It's still strong with 8.5% free cash flow margin at the stage where HIMS Nurse is located. However, it's not convincing. It's not that compelling. And this, you can see the same here with the free cash flow margin. Past quarter it increased by 5.8%, this quarter by 4.3% year on year. Yes, not that bad, but again it's decreasing. Yeah, and it was definitely higher. You can see it in the past 3 quarters. Q2 2024 15%, Q3 2024 20%, Q4 2024 10%, and now roughly 9%. That is nothing what you like to see. Yes, again, I assume it is affected as well by GLP-1 and setting up their manufacturing power and this factories, this kind of stuff, this plants, this production plants. Yes, but not that nice. And again, a red rating. And you can see it's so far, it's not that crazy good so far. Yeah, honestly, that's the truth. Not that bad at all, because I mean, again, earnings per share is very solid and top line growth of revenue is very solid. So no reason to cry, no reason to be sad, but not sure if we should pop the champagne today or not. Okay, let's check out together what is going on with the shareholder valuation. Yeah, so do they really think about the people who's giving them money to work with? Yeah, us, the shareholders. Yeah, and how they are orientated on us. And therefore we check out what is going on with the stock-based compensation, share of revenue. I already entered it, and you can see here that's the stock-based compensation, so roughly 25 million in the past quarter. And you can see it decreased the quarter before by 37%, this time only by 31%, but still increasing. However, that is not that relevant. More relevant is really what is the compensation share of revenue. Yeah, so put it in relation. Yeah, because I mean revenue is growing as well, and it's only okay to have more staff and you grant more compensation through shares to those staff members. And so we will see here, right, what is going on, and it was already a nice development past quarter with minus 3% year on year. This quarter another roughly 3% negative, which is great. It's not an all-time low. Past quarter was already 4.2%, but it is still 4.2%. And for me, actually, even though it's not lower or whatsoever, I think it's now on a good level. It's just on a healthy level, you know, so the share is not getting diluted like heavy or whatsoever, at least as long as HIMS is developing like they're developing. It's not this big issue of this 4% dilution. So I can live with it, but it's not very positive. However, neutral. And let's check out what is going on with the guidance, so with the outlook. And I need to change this because it's actually the status, and I already changed it as well. You can see that this here, those are the numbers, the old numbers actually. Yeah, and the old numbers of EBITDA. So let's check out first the revenue and past quarter, Q4. They give a full year outlook for 2025 of roughly 2.35 billion US dollars, which is a revenue growth of 49% year on year. And this is untouched. This remained untouched. It's on the same level when you check out their documentation, their press release or shareholder letter. But what was adjusted is the adjusted EBITDA, so basically the profit level. And you can see before it was 2 billion. Oh, no, wait. It's too much. Is it a zero too much? I think. Is it like this? No, it was okay. Okay, so before, for full year, it was expected 294 million US dollars adjusted EBITDA, and now it's 315 million. Yeah, so they increased it, they put it up. Yeah, so you can see margin before 12.5%, now 13.5%. So that's positive. Yeah, so we can keep it very easily. Here, an increasement took place, they adjusted into the positive direction, and this one stayed solid, which is neutral for me. No need to rate it negative when it's stated neutral, and the revenue guidance is already with 49% year-on-year growth, very, very high, very, very solid. So when we rate this, it's neutral to green. Look, guys, if they would enhance the revenue outlook, I would rate and adjust EBITDA, which would stay solid, untouched. I would keep it, give it a neutral, positive rating, because for me, revenue is more relevant than adjusted EBITDA in the stage in which HIMS is located at as a company, and for what reason I'm investing to HIMS, because of the revenue growth and not because of the profit growth. But it's in the opposite direction, so revenue stayed neutral and adjusted EBITDA is positive, so actually I granted a neutral rating, yeah, and not a positive one. But it's a close catch. It's a close catch. And when we now check out what is going on here on this sheet, yeah, with one glance, give me just one more sip of water. Wait. Mr. Rama is mentioning, correctly. Your analysis is wrong. You have the same revenue for Q1 2025 and Q4 2024. Yeah, that's not how it should be. That's not good. Wait, give me just a quick moment. I check it. I take it out of the past press release. 1.5. So just one moment, please. 481. Okay. Now it looks good, I think. Did it have any impact on the... No, that looks good. That looks good. Okay, but here we have some impact. Okay, thank you so much, Mr. Weimer, for this notification. That's a very good one. So, guys, somehow I utilized the wrong revenue of the past quarter, and so this has an impact on other data. And let's go quickly through them before I grant my final verdict for today's earnings results. So check out what is the subscriber, no impact, revenue per subscriber. Okay, that changed things very heavily. You can see here revenue per subscriber. Now it's actually increasing again because of the weight loss. I was confused as well, if I remember correctly. Now it makes more sense. You can see past quarter 34%, 35% year-on-year development, now 52%. So actually some upselling, some cross-selling is going on. Yes, again, it will be the weight loss. However, I need to be strict here as well. And now this is actually a positive one. And marketing of revenue spent, it was... Again, oh man, that was an important information, Mr. Weimer. Thank you so much, man. Past quarter, year-on-year development, -5%. Now it's -8%, so it's increasing and heading even stronger into the positive direction. So, as well, positive. That was not touched, remained untouched. Personalized solutions, share of revenue. Gross margin remained untouched. All of this remained untouched because we just copy and pasted it. Free cash flow remained untouched. Free cash flow margin, I think, is even a bit more worse than before if I calculated correctly. So that stays negative for sure. But stock-based compensation, you can see it here as well, improved actually now. Yeah, you can see past quarter it already developed positively by -2% year-on-year. This quarter by roughly -3%, so heading as well stronger into the positive direction. And again, yes, we can't. There is a certain ceiling, yeah, or floor, yeah, but it's still developing strongly, and now it's positive. Actually, now it's positive. Yeah, sorry, Lawn Mover Man. Lawn Mover Man, you are the one I'm relying on, that you give me this kind of information, man. I'm kind of disappointed. No, joke, man. Always great to have you in, as I mentioned. And however, now it looks way more positive. Yeah, great to see. And as well, I think the growth rate increased right now to, is it correct? Yeah, that's correct. But I'm just a human. To 59% year-on-year. Revenue growth, again, doesn't have an impact on the outlook because it was already 2.35 billion US dollars before, but just the growth rate had it a bit stronger now. Okay, so you can see, guys, that now it looks a bit different. Okay, now I can sleep for sure a bit better. yeah, okay. Bring me the 10,000 viewers, watchers, Stanley, and I'm ready for going into jail. I'm ready for doing this kind of stuff. No, sorry guys. But that's the reason why you should watch my stream till the end, because of this kind of minor adjustments during the final moves of this live stream. Yeah, however, guys, again, let's check out and fetch together all this information. Let's start with the KPIs. And again, now it looks quite compelling from my perspective. When we take a look on the revenue perspective, all this marketing, subscribers, achievements, personalized solutions, very, very solid from my perspective. Oh man, I'm so happy about the adjustments of the numbers, because now it's really, now it's solid. I hope you utilize the moment of low prices while I was manipulating the market to buy in some and purchase some additional shares. Oh man, guys. However, gross margins, they still very low, even though again it's affected by weight loss, and weight loss is just not that margin heavy business. I assume it will improve latest from third quarter this year on, but now it's not that great. Again, the expenditure side looks solid, free cash flow not that good. I'm not sure what is the reason. I assume numbers are correct. If not, give me a hint. But looks solid. No, looks not solid. I was just reading the chat while I was talking to you. I'm not very good in multitasking, as you know, so that doesn't look solid at all, the free cash flow, but I assume there are reasons for that. Again, some investments whatsoever. Stock-based compensation looks good, so shareholder orientation is on the right stage. Outlook was improved. I mean, we as Simpson-Hearst investors or people who are following this company, you don't need to be invested in it to follow it or watching the stream. Obviously, you can be even a short seller, but you know that a lot of times they are updating their guidance and they start this quarter already with the same attitude. Yeah, they do some kind of sandbagging. But yes, outlook great as well. Somehow it was already great, and now it was even improved a bit better. So overall, these KPIs, you can see it. I mean, it's neutral to positive rating, but the stuff which is more relevant for me, really the subscriber development, that looks good. Personalization looks solid. Expenditure not that important for me, but great to see all of this not that important. Yeah, but this one is really important for me. So really, it's a neutral rating with a positive touch. And we have here as well, when we take really on the big numbers, earnings per share and revenue, so top and bottom line growth. Earnings per share for me is clear positive, if I'm not somehow miscalculated something, but I'm quite convinced that's correct. And revenue, strongest bumper, strongest negative impact, not because of the actual results, but really on this forecast, which hits in. And what I've mentioned to you, it has a neutral rating, but with a negative touch. Yeah. So I mean, here we have something which is neutral with a positive touch from my perspective. Here we have something with neutral with a negative touch. So overall, let's say, keep it somehow a neutral feeling, a neutral vibe. Yeah. And now we have here a more positive touch. Yeah. But this weighs more heavy for me, because there's way more information in it. And again, for me, it's a revenue growth investment and not a profit growth investment right now. That's just my perspective on it. And so that's is more heavy. I balance this more heavy than the earnings per share. And again, this is neutral as well. So overall, I granted, and I tried to make it as clear as I could, a neutral rating, which is a very solid neutral rating. Again, with a more positive touch because of earnings per share and a lot of positive stuff which is going on here, outlook, this kind of stuff. Profit side developing very great. and I assume it's getting even better in the future because of compared lower weight loss profits, revenue compared to other products and services they offer. So neutral rating with a positive touch. That's my final verdict. And now let's give me, I know you already mentioned the stock dropped, yeah? If you would not tell it to me, I didn't check it right now. Trust me, I didn't check it. It basically, I would say that the price would actually, this forecast for the second quarter is really not that great. But I would really say it's slightly better, slightly improved. Maybe even stronger, whatever means strong in terms of HIMS and HERS, because it's a very volatile stock, as you know, and raising by 5 or 10% is not that exceptional for this company. But I would think something like 5% up. But you already mentioned it dropped, so my assumption would be wrong. So let's check out together what is actually going on with the price, and then I will quickly screen as well the chat here, and I will quickly, as a final move, check what is going on Seeking Alpha with the first market reactions. So guys, let's go back and check what is aftermarket price. So again, my guess would be 5% up. It's not that heavily down. I think when I read the first comments in the chat section, it seemed to me like more negative, like 1.3% is not that heavily negative. I can live with this very good, very well. So while you can take a look on the after hours price, I will quickly check the chat and go through it. Okay, where is the one? Okay, Suleiman Ahmed, do you think the numbers of the deal with Novo Nordisk is included in the forecast? Good question. Yes, but no. Actually, I think if they are included, then really on just a limited level, a really limited level. I think the outcome of it is very difficult. You told already that they had this deal and it's a huge deal, and we all know the market reaction of the last week was very strong. But from my perspective, actually, I think a little bit different. I mean, for me, HIMS makes what makes HIMS different is really this step-by-step approach, not try to cover everything like Teladoc, like other telemedicine companies. They really make sure to do their things right and have a good strategy, all of this, rolling out all the products very accurately, squeezing them out, promoting them and address them correctly to the market. And now personalize them, working a bit with AI, granting great service, and really taking care what they are doing. A little bit more quality than quantity focus from my perspective. I like this very much. And for me, actually, I was even a bit concerned when I saw this Novo Nordisk announcement. First of all, I mean, for me, it's not heavy in my balance because of LifeMD and Roman, they as well. So competitors, they as well somehow signed kind of the same deal, I think. Yeah. So not sure if there's any difference, but it looks like the same deal. So it looks like the management of HIMS and HERS backed that in because of their proactive negotiation skills. Maybe I see it wrong. Maybe I'm missing some insights. But that is how it seems to me. So I don't rate that crazy positive from the achievement from the management, actually. But yes, it's good they have it, and it's better than just Amazon would have now a deal with Novo Nordisk, for instance. Yeah. However, again, what makes it special, I've mentioned a moment ago, and I'm sure if they go for this kind of cooperations with Novo Nordisk, they know what they are doing. I'm very convinced, and I'm trusting the management 100% of HIMS and HERS. But on the other hand, I'm not sure if they need it. I'm not sure if that is what they makes them special. I don't even know how the cooperation really looks in reality, how they will forward the customers, because again, wait, it will break. Whatever. What I want to tell is that yes, it's a great approach to. I mean, they will lose customers for GLP-1 products for sure, because I mean shortage is over, and they can utilize them to forward them and transfer them to Novo Nordisk. I like this approach somehow, and I didn't investigate it too much in this regard. I didn't read too much, actually almost nothing. Then the news on HIMS nurse. It's just what my thoughts are. But again, it's I don't see it as a game changer, Novo Nordisk and the deal, and I assume the management as well, they don't see it as a strong game changer. Who knows what will bring this kind of collaborations in the future, what they are planning. I'm not sure how they will utilize them with diabetes products, with testosterone, with menopause, with all of this kind of stuff. Yeah, who knows what kind of potential existing. I really hope they will not lose their DNA as a company by doing this. And I hope they participating at least on the same level like HIMS, like Novo Nordisk, yeah, or like other companies they are cooperating with, yeah. So, and again, I think they're considering it somehow on the numbers, but the consideration will not be that strong. Yeah, Lone Mover Man is mentioning personalized customers are more sticky. Yes, yeah, is the only positive turn. No. Now we have adjusted the numbers, not manipulated anymore, and I think there are good results. Max S, you are asking, are you also hearing the earnings call? No, actually not. I'm just covering now the results, and later on reading the transcript tomorrow or a few days after. I won't sell my stocks, my shares because of those results, or dealing on a more quick way somehow on a daily basis. So for me, not important. And I planned to cover them in the future, but I think there are other channels you can use for this. And the best thing is, I think, to listen to the call by yourself or read it under relaxed circumstances. Drink some coffee or tea to it or whatever, or whiskey or whatever you like, and think about all what they are saying. And I think it's better to keep it like this and not getting covered them live. But I understand if some people prefer to listen to them, while others are most of the time just watching, not adding anything to it, because actually that is no hate, no front, but that is my experience with YouTubers most of the time, who are begging live earnings calls. Most of the time they're just sitting there, the stream is going on, sometimes they're shaking their head or not, and at the end they say, yeah, okay, let's see, I need to sleep over it, everything so far sounds okay, nothing has changed, whatever. So that's the reason why I'm not guiding or backing somehow the calls, actually, not at least live. But we will see what the future brings. If I find the right motivation for it, and time is actually more essential here, I can think about it. And actually you can see after hours the price is jumping around a bit, was already now more than minus 4%, and now it's 2.5%. Was already almost neutral, so I think the call is already affecting somehow the price development. Let's see what will happen in the upcoming minutes. Stanley Nestaraj is measuring, if I remember correctly, the cross margin is very accurate to their projection. It will be going lower to around 70% because customers get discount on packages, so they buy more products. Or buy long-term subscription with discount. Yeah, that might be another reason. Yeah, good that you mentioned it, Stanley. Very good input actually by you, colleague. Yes. Now they are running on 73%. So it's very likely not just weight loss. I mean, it is for sure an impact on the cost margin is weight loss, but you're sure you're right. It's part of the plan of HIMS and HERS. They already stated it in the past that it will get lower, and it's fine. It's part of the game. True. Let's continue. What is wrong here? Okay. Well, stock manipulation. Kent Baguetto. Are you serious, bro? Hey, colleague, I always mentioned that there is no guarantee for correctness of the provided data, and I think it's always important to check your own numbers. If you are a single stock investor, like me, it's always important to do your homework, and to just listen to some people like me, some people who are sharing their opinion or experience on YouTube, and buying because of this or making investment decisions based on this input. I think it's not a right approach for sure. I always try to avoid to do any mistakes, but it happens, as you obviously have experienced. But again, I think everyone here in the chat, everyone at least who is invested in single stocks, just my opinion, should have own calculations, and working with charts, doing some quantitative analysis, how is the strategy, who's the management, what is the perspective, macroeconomic stuff. And if you're doing all of this stuff, so making sure you do your homework right, I think there is not really a strong negative impact by me than to present wrong numbers for, let's say, 15 minutes or something like this. But I would highly appreciate if you in the future can somehow let me know what is going on there. It's actually the first time it happened, but no guarantee it will not happen again. It is sometimes how it is. And I'm quite happy that Mr. Wehmer addressed the situation to me. Very happy about this. So thank you very much. Lawnmower Man. You're right. It was more dramatic and entertaining. At least something positive. It is going to go like this. Let's see what is going on with currywurst and sauerkraut. I'm still wondering who you are, but I will figure it out sooner or later. Paul Serenity, highly appreciate your kind of feedback. Thank you very much for the coverage. Was mentioned by you, and you're very welcome. Look, today I was get a little bit more sleep in the past days, even though actually past weekend my wallet was stolen, my smartphone was stolen. Even from my girlfriend, the smartphone, the wallet was stolen. So we had it was not really a weekend. It was a weekend full of organizational works and whatsoever. So it is sometimes how it is, but at least my broker account remained untouched and secure. So, however, I could still find enough sleep, and it was really a pleasure to have this call, actually. So it was really entertaining for me as well. Paul, and you're asking as well, what are your prior picks for the next month investment? Do you buy every month with an investment plan? Okay, give me just a moment, Paul. A good question. I really want to check out very quickly the first market reactions, and then I will share my portfolio and show you how I do this very compactly, very quickly. So we have here the first 12 comments, market reactions. Let's see what people stating. Because again, I have this neutral rating with a positive tendency as a verdict. Let's see what others stating. The dividend dude says absolute monster of a stock, holding through like 2030. No signs of slowing down, and 8 likes to it. So I think people appreciate what he's mentioning and sharing his opinion. Felix Vetter is saying, thank you, glad for the content you provided for us. Felix, appreciate, and Appreciate this kind words, always keeps me motivated. I'm not always sure if I do my stuff good or not good. And believe me, I'm the most critical person of my own, for sure. Yeah, but however, I do it how I think I would love to hear it, even though it's not always in perfect shape. I'm not investing always that heavily much time for kind of whatever preparation work. I'm not doing each day or each week some content, but at least I would be happy to sometimes see someone presenting information like I do it, without too much noise on the side, let's say it like this, and really sticking behind what he's saying. Because as you know, I mean, now I'm roughly, I think 52% with my portfolio invested into HIMS and HERS. I think whatever, 80, 90,000 US dollars. Look, if I do bad research here and use the wrong numbers, it will hurt me as well, not just you guys. And not everyone, I think, who's creating content out there, I think, is invested in the things he's talking about or investigating and really focusing it during their free time, you know. However, let's go through the other feedback. Office game is mentioning still overvalue. Multiple is just too high for what is pure marketing play without its own intellectual property. And yes, again, this marketing machine reputation, just buying revenue, I assume they're not losing it because 6 people are liking it. Yeah, and now they are somehow arguing. Yeah, whatsoever. Look, I understand his position. But that's not my position. That's not my position for sure. Yes. EHRGQERGV ADIF is mentioning 80k in HIMS is a word. Yeah, it is actually. It is. I mean, even I sometimes are concerned about this amount of money considering my overall portfolio. And but it grew to the stage somehow, and now I'm sticking to it because actually I think it's still undervalued, not overvalued like Off His Game is mentioning it here at Seeking Alpha, a platform I'm definitely recommending to you guys. Even I'm paying per month regular fee. I'm not somehow related to them, but yeah, it's definitely supporting me very strongly, especially in the beginning, in the first days of my investment career, let's say like this. And Shaylee subbed. Yeah, thank you so much, man. I think it's the first time someone wrote in the chat subscribed. Not sure if that's the first time, but it feels like the first time since a long time. And very positive feeling, I can tell you. So that's definitely worth my time was worth for getting this feedback. That's great to hear. Let's see what else is stated here. Joseph Webster is mentioning it deserves a bit of a sell-off for downward guidance revisions. The chart looks good, though the option premiums on this are insanely high and it has too much of a following, so content to sell covered calls. And then Free Leaves answering, there are no downward guidance revisions. Q2 guidance is initiated here, not revised. Yeah, actually they improved it, as we mentioned, as we screened it together, adjusted EBITDA. It's just not what analyst consensus was. On the contrary, management reaffirmed previous full year 2025 revenue guidance and raised full year profitability guidance. Yeah, okay. And then Louis Stevens, I think he's as well a convinced analyst here. You can see investment group leader. I read a few reports of him and I think it was always quite compelling. And he mentioned it maintained top line guided and upped bottom line despite GLP-1 sales being reduced significantly following shortage ending. Yeah, and I mean, look guys, again, HIMS and HERS, I think they are strong in sandbagging their guidance, their outlook, and I think it's just reasonable considering that they're losing a bunch of their GLP-1 sales, but it was already considered, yeah, so it's not like they stated this full year guidance 1 year ago in the mid of 2024 and thought, okay, they can still sell it. They can still sell GLP-1 without any limitation. And you can see long HIMS. Yeah, so overall a mixed feeling, but yeah, surprise, surprise, I'm more on the positive side. And now guys, Yeah, sorry for this, Charlie. I already explained it. I'm a person who just follow covering the press release and the shareholder letter so far, at least, and in the past quarters. And I am tomorrow or a few days after, I will read the transcript by myself. And in the future, I plan, like I did it already in the past, I plan to do it the day after the earnings release an additional stream to cover just what was communicated during the call, yeah, and fetch it together and rate it a bit. Yeah, that is what I like more as an approach. I'm not this type of guy who likes to share with you the call, because I think I can't focus now then on the call and you guys either, actually. Yeah, so but I know that others are doing it, and if you like it, I appreciate it, and I can recommend to switch to another channel. But again, in the future, not sure when, and not 100% sure if, but at least I plan to go back to my roots and cover calls as well, at least at the day after, in kind of a summary fashion. Yes. But however, Paul Serenity asked, what are your prior picks for next month's investments? Do we buy every month with an investment plan? And so I'm quickly sharing my YouTube channel. And here you can see the community section. And here I'm actually sharing all of every month I'm sharing a portfolio update. Just a quick comment here, something like this, blah blah. You can follow me as well on Instagram. Here you have my Instagram, for instance, and you can see here different screenshots, developments, insights of my portfolio, and even an evaluation table of all the shares I'm invested in. And actually, those are the shares, those are the stocks I'm covering. I'm not only covering stocks I'm really invested in, and because of the low number I'm invested in, I'm quite heavily invested in each of those. And how this looks is what you can see here. Hi Tony and Kay, what's your thoughts after earnings? Okay, wait, let's go back. One moment. I mean, now it seems like after hours, after market close, more than 4% negative. Not sure what was communicated in the call. I think simply not any additional negative to the press release and to the numbers already. I think they just not argued it like, oh, okay, it's reasonable why next quarter revenue is not that high. Yeah, so to fetch it together, I rated it with neutral, with a positive tendency. Yeah, a lot of stuff was positive, as you can see here. Profit was positive. A lot of details in terms of revenue per subscriber, marketing of revenue, personalized solution, all of this have been positive. Outlook have been positive. I think the elephant in the room for those results, this results is, in my perspective, in my perspective, for sure, the forecast of Q2 2025 with 540 million revenue, which is just roughly 5 million more compared to this quarter. Yeah, so I think that is the big reason why the stock is tanking. I mean, again, it's nothing new. If you invested in this tools company for quarters, you know that a lot of times they provided great results, and after hours or even on the next day, development was not always adequate and accurate to their results, to their performance. Yeah, at least from my perspective. And so if there is really a reason why it's tanking, for me, it's the guidance, the revenue guidance of the second quarter. But maybe it's just HIMS and HERS, it's just the market, and it's just some kind of developments which happen sometimes. Yeah, and let's say like this. Some people say the market is rational. I don't think it's always rational, but everyone on his own, has his own opinion. Yeah. However, guys, I just quickly wanted to show you my portfolio, and that is my portfolio of, actually it's quite up to date, from past Friday. That's the latest portfolio update I shared as well on Instagram. and on YouTube. You can see here, you can follow me as well on Instagram. And you can see I'm just invested into 6 stocks. Yeah, Elfen, it's a Dutch company. You can see here the country where they are headquartered and the services and products they're offering. Gambling.com, my newest company, my rising star, hopefully. But it's a lot of time, it's not very unregular that I'm investing into a company and then it's tanking. Tony, you're very welcome. And Grab, HIMS and HERS, new and simple ones. So 6 stocks I'm overall invested, and Grab I'm not sure, but all of them, they are gambling not, but all of them are invested in for at least in a year or more. Yeah. So, however, what I want to state is that you can see it here as well at this illustration, at this diagram, or this chart, or this cake illustration. You can see that my share of HIMS and HERS is very strong, very strong. It's even $92,000 US, so even a bit higher than I expected. And you can see then really there's a strong drop to the second largest one with new, even though new is quite strong compared to gambling.com, which is my lowest one. Yeah. However, I really try to drive a high focused single stock picking style and strategy, because I want to, most important for me is I like to follow companies, really the company. I'm not investing in stocks, I'm investing in companies. And I really like to follow them and their environment, the macroeconomics, very closely. Yeah? So for instance, in terms of Alphen, and they are very strong in EV chargers in Europe, especially in the Dutch market, in the home market. So I follow each month the sales of EVs, yeah? Electrical automotives in Europe, yeah? And in the different countries. If I would be invested in 20 companies, I mean, it's not my main business here. It's just kind of a hobby to invest in stocks, and maybe it runs out well, maybe not. Yeah, but it's not like my major income of money, source of income. So I can't do this for 20 companies. And so I decided to just cover a low number of stocks, and that is the reason why I'm just covering 6 of them. Yeah. And I spread them across some different countries, different sectors, and this is how it looks. And so when you ask me what are my prioritized picks for the next months, and if I buy every month with an investment plan, no, I do not. I don't have an investment plan. If the stock prices drops, I try to somehow fetch some money and invest it. And otherwise I keep my fingers still and I stay stable and do nothing actually, yeah, and try to not somehow crush my mind with some market noise or whatsoever. Yeah, so that is my approach, and I leverage actually. Yeah, so I use debt money, and not sure. Of this $180,000 US, I think how much? 30,000 must be something like 30,000 is debt money. Yeah, so I'm a little bit more than 100% invested. I definitely would not recommend this. It sometimes can be pain in the ass for your mind, and I'm a very mentally stable person in this regard, I would say. Because again, it's my hobby. Yes, it's more or less all the money I have. Yeah, but again, I'm living a comfortable life as long as I have $10,000 US or whatsoever, and a roof above me, and I'm healthy, and I have friends and family and whatsoever. Yeah, so it's not that important. So I would not recommend to lever your portfolio, guys. That is something what I definitely would not recommend. Yeah, that is all I can say to this topic. Yeah, however, that is my approach, and if I would need to invest into the next months, yeah, difficult question. And again, guys, no consultation, no financial advice, no guarantee for correctness of the provided data. That's important. Yeah, I mean, again, that's just my own portfolio and what I would do. But if I would not be invested in any of a single stock, and I need to invest into the next month in one stock, I actually would invest in HIMS and HERS. That's how it is. Today, yesterday, and tomorrow as well. Yeah, that is actually the case. Yeah, you can see here, because why? You can see here my valuation sheet, and I'm comparing those companies based on different KPIs: sales growth ratio, EV sales, price earnings. Then I calculate kind of a fair price comparator. Don't ask me how I do this. It's not really 100% professional, I'm quite sure. But it at least works for me to compare different stocks to each other. And then you need to compare, you need to consider in which kind of industry they're active in. I mean, SentinelOne is cybersecurity. That's a very expensive industry, yeah. So 4.7 EV sales here is relatively cheap for cybersecurity compared with Grab, which has a 3.9 EV sales for mobility and food delivery business and some banking as well. Yeah. So, however, we have here a fair price comparator, and just when you take a look at this, you can see first of all my Essence of Capital ranking, and HIMS and HERS is ranked on rank 1, on position 1, since this ranking is existing. It never moved actually. Actually, nobody moved, more or less. New is unmoved as well. Grab, I think, as well unmoved. Yeah, never moved. Remained untouched. And so this is the order I would purchase if I would not have any single stocks. Yeah, I would start as well with HIMS first of all. Then I would go to Nubank. I'm very convinced by New Holding. Then I would go for Grab. So these are these big chips for me, and big plays for emerging markets. And then I have SentinelOne, because cybersecurity is just my favorite industry. I can always repeat I'm never getting lazy to repeat this. Cybersecurity is my favorite industry, even though it's difficult for me to understand. But I just granting myself the luxury situation to be invested into a company. I not 100% understand the products, the environment. However, I'm somehow want to be invested in cybersecurity. So that's my fourth position. Fifth is gambling.com. Again, my newest investment. It's internet gambling and betting, sports betting. Yeah, maybe on the moral perspective. So if it's good to be invested or in something like this or not, might be a critical one, but everyone needs to make his own decision here. And Elfen, I mean, it's a Dutch company. If you are a loyal viewer of the stream, you even know that I stand in front of the new headquarter, and I was smiling, and then a few weeks later I was almost crying because the stock dropped that heavily. But as well, it's something which I'm quite convinced at least as a company which is active in the renewable space in Europe, which I think for me is a great fit, and I like to be invested into this fit. And for me, Alphen covers the best for me the renewable energy sector in Europe. That's my perspective. However, all of this is just my calculation, and you can see it here very clearly how I would approach. And just 2 new comments by Adi. Thanks for sharing. I think I could not sleep with a portfolio like this. I like some risky investments, but I need a solid core. I hope it works out for you. Yeah. I understand this 100%. Look, for me, I'm not that sensitive about money again. Yeah, and it's just not my nature. Again, I already mentioned in some German board a few weeks ago. Yes, sometimes I sleep bad, but not because of money, not because of bad debt. I'm not sleeping bad because of losing or winning money at the stock market. It's not impacting that heavily. I'm not talking that much in my private space about this kind of stuff. So it is just how it is. And I know I completely can relate to it that not everyone can sleep that well with it. And it might be always as well affected on your source of income, how successful you are there and making money or not. And if you can lose all the money, you can again create a solid level of budget so you are not need to sleep under a bridge or whatsoever. That is for sure an impact. And of course as well, what are your personal circumstances and preferences, but circumstances as well, you know. So do you have a few children you need to take care of, and whatever, paying some fees for for your home or whatsoever, yeah, the house you're living in, you have car what you somehow purchased, and you need to cover and compensate the debt. God, sorry. Yeah, so all of this is depending on you personally, and for me it's a good fit. It's a great fit how I do this. For someone else, I understand it's not. Paul is asking, did you have ETFs in the past before? What do you think about latest ETF trend? Does your girlfriend invest too? Yeah, not talking about my girlfriend, honestly. It's nothing personal, but yeah, not digging deeper there. But for sure. I mean, I started to invest in 2016, 2015, 2016, and I started to invest in ETFs. And I invested in 3 different ETFs at a very popular bank institute in Germany or in Europe, and with quite high fees. And then after a year, I decided to start my own strategy how to invest in ETFs, and did this. I purchased each month on own calculation. How I invest, where I put how much money in it, and I really started with 50 euros per month actually. That was the lowest amount you could invest in the past in Germany. Now you have neo brokers, so low budget brokers. You can invest, I'm not sure, 25 euros or something like this in a month per ETF. In the past only 50, I think, at least at my broker. And so this is how I started, and I did this till 3 years ago, 3 years ago. Then I purchased a bunch of single stocks. So I was invested in roughly 25 stocks. Alibaba, Tencent, my first 2 stocks actually I was invested in, or companies I was invested in, but as well Amazon, Alphabet, CrowdStrike, a bunch, yeah. Even some underground stuff, but as well some more popular one which dropped now. Trade Desk, the Trade Desk, for instance, different kind of companies, yeah. So again, 2025, and then I've decided to that it's too much for me. I really lost track to different stocks. I always wanted to have a certain focus on it. I really wanted to follow those companies like the headquarter would be next to my apartment, yeah, and I could see that they are growing like at Sims or whatever, like a video game or so, yo, and really stay close to it like in reality. Like it would be the bakery chain which starts with the first first subsidiary next to you, yeah, and with the first store. And this is how I tried to readjust it. And again, 2 or 3 years ago, I sold most of them. I just kept HIMS and HERS new and a few others. So overall 5, and exchanged some like Enphase before really the strong drop. Luckily, actually, I sold Sentinel-1. I was very strong in profit, then I lost something, and somehow I think I closed it on more or less a neutral level. A little bit disappointing, but it is how it is. And whatever. Perion, I lost a lot of money, compared a lot of money last year to Perion. Those of you who are following this stream, this channel, they know what is going on. So that was as well not a very positive experience, really not a positive one. I think I've lost, for me, a lot, at least considering last year. I'm not sure, 10, 15, 20,000 US dollars in just a blink of an eye, at least. At least it was my experience, and tried to learn out of it, sold it, luckily, because now I would even lose more. And yeah, try to go on. And actually as well with Alphen, I'm quite strongly in the red. What you can see here, this company, this European one, I'm quite negatively here. But however, it is part of the game, and I'm ready for it. At least I feel ready for it, and I try to improve as well. And if you check out the description of this YouTube channel, you can see that I'm stating there that I'm just a general, regular investor like you and like others, and I just like a private person, and I just try to improve. And improving, I mean, if you share your opinion, your thoughts, and you doing live streams and all of this kind of stuff, and need to back live the earnings results of the companies you invested in and prepare it and take care of it, I think you are even more forced to develop yourself, and take it somehow serious and make decisions with kind of at least some thoughts behind it, and not just doing it because out of emotions or whatsoever. If I'm now in my position, would sell each day something and say and buy it on the next day back, and say something on one day and on another day state it in a different direction, I think it would look really unserious and non-professional and not reliable. And so yeah, this YouTube game at least forces me to stick a little bit more to my game plan. Yeah, long move, remember, totally right. Well, no big profit without a high risk, 100%. Yeah, thank you very much for the sub, Adif. I appreciate that you like the way how I think. Yeah, great to hear. Paul, yeah, okay, that's the last post I will reply on, because I need to go to bed. Really, I need to start working tomorrow early, and it will be a long day. But of course, I like that you use the chat. Maybe somehow in the future I need to do a Q&A session, but I think it's not the right time right now. For sure not. And maybe in 2 years, 3 years, whatsoever. But you can always send me, of course, a DM or comment one of my community posts, and I can reply on it if there are any questions. How did I pick up investing? I mean, I was at business school basically, with a focus on business at, let's say like this, at college as well, with a business focus. My job as well has a commercial focus, not banking or whatsoever, but yeah, commercial focus for sure. And so yeah, it somehow backed me through my life, I think. Yeah, but it's not like I learned it at school or whatsoever. That's Germany. You don't learn this kind of stuff in a regular school. Maybe in a private school or whatsoever, or private college, or some very specific specific how you call this college or whatever. Wait. Let me check this quickly. Yes. Subjects or disciplines. Okay. So if you study some specific subjects or disciplines at college, then maybe you learn investing, but definitely not in my case on this level whatsoever. Of course, basics as well. If you study business, you know what is profit, you know what is sales, you know what is marketing expense. But I guess as a regular person without any college, you can know it as well, or even on a better level. And no, not from family, not from friends or whatsoever. Yeah, and more on my own for sure. And a lot of through internet, a lot of through YouTube. I'm member of a German investment board since 2015, 2016. And I have there my own topic, my own blog, let's say like this. And then on a certain point of time, I've decided to transfer it to YouTube actually. Yeah. I have a lot of YouTubers I'm following, ads. I have no TikTok or something like this. Yeah, but YouTube is really the thing I'm taking care of. Some Germans, some international ones, like US, like Great Britain, like even Indian ones. So there are a bunch of very good people out there. I think a lot of them are more not like on this in this big stage and focus. A lot of times, honestly, I have the feeling that when YouTubers, investment YouTubers, finfluencers, you call them in Germany, not sure how you call them in your country, but a lot of times when they're getting larger and larger, I have the feeling, and it's just reasonable, but they making more money out of YouTube than out of their investments. And they sometimes, even if they followed them at the early stage, they change their investment style very heavily, more on the casual side, try to reach more audience, covering a lot of companies they even might be not invested in, or just which are mainstream to get some views, or maybe even more solid, more reliable, larger caps, because again, they're already making good money with YouTube, so they don't need to go that much on a risky way. And I've decided differently here. Okay, last comment from Lawn Mover Man. That's great. You're welcome, Paul Serenity. You're very welcome. Last comment from Lawn Mover Man. First comment and last comment. Thanks again for the J. Much more fun to go through the numbers together. Catch you again. Consider Currywurst business. I'm sure you could build an empire. Hey, I'm ready for it. I'm ready for it, colleague. We will see each other on the next stream. So, guys, just a very quick outro that you know what you can calculate with in the upcoming days and weeks. You can see here the green boxed ones are the ones which are outstanding, and I will cover as well, very likely, at least I plan. So what is it, which date? Okay, so next week Monday Alphen, then Tuesday New actually, and then on Thursday gambling.com. Okay, so it will be a very intense week next week. Actually, I didn't know it, but now I know it. And the last day of the month, the almost last day of the month, 13th of May, I will cover cybersecurity company Sentinel-1. Yeah, so 4 more earnings live streams will take place, at least if everything goes well and I'm healthy. So I would be very happy if all of you join. It was definitely a pleasure. I really appreciated that you have been that active in the comment section, the chat section. That was amazing, actually, guys. And I will for sure I'm not sure what. Let me check one more time. What is the? I checked the word, but what is the price? Stock price minus 3.56%. Okay, I can live with this very well, even though it was not a big improvement in terms of the stock price of HIMS and HERS, at least today. Let's see what the future brings. I will sleep very well, smile through during the night, I'm very sure, because of you and because of this experience. Was a very positive one. So thank you very much. Guys, as always, take care of yourself. Health is most important, and social environment and all of this. Money is not everything. And yeah, guys, I hope I can see you next time. All the best. Bye. A sense of capital.